Furnished holiday lets. Here in 2021, furnished holiday lets have become increasingly popular because people can let out their properties as holiday lets for a lot of money, so they've been particularly profitable in 2021. So in this video I want to have a look at the tax effects of holiday houses and holiday flats, so that you can understand not only the commercial side, which is how much you're letting it for, but also how it's taxed. And there are some significant tax advantages. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel. You'll be very welcome. If you like the video, it helps me and the channel. Thank you. So holiday lets. I think the first question is, what is a holiday let? Well, first of all, it's got to be furnished. It doesn't have to be an operating holiday let, which means it's got to be furnished. It's got to be let with the intention of making a profit, so you can't just let it for very little rent to your friends and family. It has to be commercially let. And then there are actually some rules on number of days. So you've got to have 105 days, which is 3.5 months more or less, where it's actually let, within a window of 210 days where it could be let, which is about 7 months. And within that they have to be short-term lets, so they shouldn't be less than 31 days. So if they're less than 31 days, they don't count towards the 105 days, because what they're looking for is holiday lets, and once you're over 31 days, a month, then it's unusual for people to take a holiday for more than a month. Now, those are the principal rules. There are a few exceptions. So like if somebody goes over the 31 days because they're ill and they can't move, or their flight is cancelled, which is probably more likely in this year than any other year, or if you do have, there are some sort of exceptions. If you've got a sort of history of trading it and you miss a year, there are some special rules that you'd want to look at in those circumstances. So that's what a holiday let is. So why is it important? Well, it comes down to the difference between a business and a trade, which is nice and technical. So any let is a business. So if you have a rental business, but it's not a trade, whereas it is thought that a holiday house business is an actual business. So why does that matter? Well, it does matter. It matters because if you've got a business like a holiday let, you can use those profits to put against your pension, so that's nice. They can be relevant assets for inheritance tax. And there is the holdover relief. So if you're selling one property and buying another, or if you're giving it to your children, for example, then you can get some reliefs in those circumstances. Now, if you want to, that's broadly what happens. If you are interested in those specific things, then do also seek professional advice, because there are pernickety rules that you just need to be really careful of. But broadly, a holiday house is a trade, and that gives you tax advantages. It also means that you can get capital allowances, and there's other things actually. You can get you should have business rates as opposed to domestic rates. Now that in 2020 that allowed you to get the £10,000 grant. So if you see people with holiday properties with these £10,000 grants, that's because they claimed small business relief and had business rates as opposed to domestic rates. And very often, particularly if you've got one property, then you don't pay small business rates. So you don't pay any rates. So that can be an advantage. Although you might not get your rubbish collected, so you might have to make separate arrangements for that. There are two other little tax advantages, or maybe quite big tax advantages, and a disadvantage. So it's both ways. So in terms of advantages, there is a restriction on the interest that you can claim as a cost if you own a normal let business, which doesn't apply to a holiday let business. So that's definitely an advantage. But there's a big bad one, and that is VAT. So holiday lets are VATable. Now for most holiday lets it doesn't really matter, because there is an overall VAT limit of 85,000. So as long as you don't go over the £85,000 turnover each year, then you don't have to charge VAT. So if you've got one, that's normally okay. If you've got half a dozen, then that's a big problem, and you'll have to charge VAT. You can't probably get any more money for your let. So therefore, in general terms, you'll just lose that money to the revenue. VAT is not simple though. So if you have other businesses that you own that are VAT registered, then automatically, as a sole trade, then you may have to declare your holiday let as within your VAT return. So if you do have another VAT business that you're trading under, or you go over the 85,000, you really do need to have a look at that, and definitely seek professional advice if you're at all unsure, because VAT in principle is a simple tax, but it's not simple tax. It's really really complicated, and you don't want to get caught out on it, because it's 20% of your turnover, not 20% of your profit, so it can stack up to huge amounts of money. So there you have it, the broad brush of tax benefits and costs of having holiday lets. Yeah, so if you go through the hassle of having weekly or over weekend lets for your property, it is more work, but you get the tax advantages of it's a trade, not just a rental business. You can get capital allowances, you can make pension payments against it. There's advantages for if you dispose of it to family members or gift it to family members. There might be inheritance tax advantages, there's interest advantages, all those advantages, and then the stinger, which is the VAT. I hope you found this helpful. If you need any further guidance, then please let me know. As I say, I do regular updates on tax and accounting, so if you'd like to be kept up to date, please subscribe to the channel. And if you liked what I've said, then please press the like button, because that helps it go up the YouTube algorithm. Thank you very much for watching and listening.